Guys, so today I'm doing a video about something that I had talked previously. It's about Bollinger Bands and using different values on those Bollinger Bands. First, I want to say that trading is very risky and you risk losing money, so please note that you risk losing a lot of money. So the second thing is this strategy can be used on its own. You can use it on its own. It can be used on its own. So I don't know if you remember the values of the Bollinger Bands. So the first value was 140, standard deviation of 2. The other one is 140, standard deviation of 1. I want to say this is not my creativity. It's a course that I bought and found this strategy. So, and I'm going to teach it that way. So let's proceed. So this is, no, don't get from the daily. So these levels, they act as our supports and resistance. If we are above this red line, which is the standard deviation, if we are the basis, not standard deviation, if we are above this red line, we are bullish. If we are below this red line, we are bearish, and this acts as our supports and resistance. So that is it. So currently, gold in the daily time frame, we are bullish. So in the 4 hour, we are bullish. Are we bullish or not? We are bullish, right? In 1 hour, we are bullish, right? In 1 hour, we are bullish. And in which time frame do you want us to trade? 15 minutes. So in 15 minutes, we are bullish too. So this is what we have, right? So these areas act as our support and resistance. You know how to draw a support and resistance. You know how I draw it because I showed you early how I draw it. So this one is going to act as our confluence, just as our confluence. But we know direction. It gives us a direction. It gives us our support and resistance. Even when we are drawing our support and resistance, we are drawing it as a confluence to what we have. So at this point, this is the support, the resistance that we have. So that is the level we are headed to, and this is the support that we had here. And we are just coming from a support level. So that is how we use this, and that is how I want to use this. So these ones act, this one shows us our direction, which is bullish. Now from there, you would be taking trades. You would be buying from that point. Let's see previously what was happening. So when did we become bullish? We became bullish here. So we can't say we became bullish at this point when we broke this level. So we formed a support here. We formed a support at this point, and we said we sell at support, we buy at resistance, right? So, and sometimes the support becomes resistance. So this was our support. We broke our support, we retested, a nice buy, and from that point we kept buying. It came to retest the resistance for another time, a second time, and we bought. So at this point we know we are buying, so you're just looking for an area to buy at. So that is why I'm saying this thing is nice. You can practice on it. It is so nice. It's not my creativity, but I know it can assist someone. So a break of this one becomes now this is an area of resistance. So at this point you are looking to sell because we are below the basis. You are looking to sell here. You are looking to sell. A break, see a retest, and these things act as resistance and they act as a support. So this one can really help you if you are a beginner. It can guide you on what to do, or if you are like struggling with the EMAs and you have tried EMAs and they are not working for you, you can try this one. It acts as a great confluence. Maybe you can use the whole numbers, the ones that we talked about previously. You can use them, or you can use this one on its own and you draw your own support and resistance or order block. Whatever it is that you use, this is a good confluence for it. Because even if you are looking for sales, you cannot look for sales in a bullish market, because at this point we have an OB here. And let's see where it is. This was the last bullish momentum before this sell. So this one at this level, our OB is here, right? So at this point, there are some people who would be looking for sales. Yes, there were sales, but you are selling in a bullish market. So if you could have sold at this point when the market came to this OB, you decide to sell, you see how much damage it could have cost you. Because for you, you know it's a sell. Every time it is here, you're selling, and you are holding on to that sell. So, and finally, we went. So, knowing the direction of the market is really important. Knowing, like, where are we? Where is this market? What is it doing? Are we bullish or are we bearish? Because this guides you, because you know the OB works, other blocks work. So, and you are like, why did it work? You start second guessing, and you're like, I've learned, why am I failing? Sometimes it's direction. The market is bullish and we are trying to sell because it came to your zone. That doesn't mean that zone was not relevant. It was relevant, but the market was already bullish. So that's what I can say. So be very careful on the direction of the markets. That's why we use OB. That's why we use a lot of things. So sometimes the OB fail, not because OB don't work, but because the direction had already changed. So when they say trade with the trend, like at this point, you see at this bearish, when the market is already below this zone, you are looking for sales, and you're continuing to look for sell until it changes direction. And this, when we are here, when we are below this basis, these are our supports and our resistance. When we are above, these are our supports and our resistance. So that is it. So for me, if I would be struggling with the EMA that I use, this would be something that I would use very well as a beginner. This is a nice strategy that I would incorporate, but I would always ensure that I trade with the trend, because if I'm selling, if I'm looking for sales at this point, you see, I will be committing an offense, because it's not like the market won't sell, because at this point we see the sellers who got in the market, but we had buyers coming again. So it's just looking, when the market, that you stay out and wait for the market to give you a good sell, a good buy, because our direction is bullish. When the direction is bullish, just look for buys. When the direction is bearish, just look for sales. Look for areas where you can sell, because if you're going with the direction, let's say you're going with the direction, whatever method you use, if you're going with direction, the number of trades you will lose will be very minimal, and the chances of you winning will be very high, because even if the market sells, it will buy, and you're looking for buys, and the odds are for you to buy. So for me, I would recommend follow the trend, and this one is very good. This strategy is nice if you're looking to trade with the trend. So it's not financial advice, but this is something that you can try. This strategy is something that you can try. Try it and let me know what you think about it. Bye.